company is a business structure where the owner's responsibility for debts is capped at their investment. It acts as a distinct and separate legal entity, meaning the business can own property, sign contracts, and be sued in its own name. It requires formal registration, public disclosure, and stricter administrative compliance. The owners, shareholders, are only responsible for debts up to the amount invested. In case of a limited liability company, shareholders' personal assets are protected if the company fails. Types of limited companies. Single-member company, SMC, a private company owned and managed by just one person. Private limited company, LTD, most common. Shares are not offered to the general public. Public limited company, PLC, can offer shares to the public. Limited by guarantee, often used by nonprofits/charities. Members guarantee a nominal amount rather than holding shares. Steps to set up. Select a name. Ensure it is available and not already in use. Appoint directors. At least one director is typically required. Prepare documents. Create a memorandum and articles of association, company rules. Register. Submit details to the registration authorities. Advantages and disadvantages. Advantages. Protection. Limited financial risk to owners. Personal assets are protected if the business fails. Continuity. The company continues to exist even if owners change or pass away. Professional image. Generally seen as more credible than sole traders. Tax efficiency. Potential for better tax planning compared to sole trader income. Often pays corporation tax, which can be lower than personal income tax rates. Capital raising. Easier to raise funds by issuing shares or getting bank loans. Disadvantages. Administrative burden. Requires registration with authorities, e.g., Companies House in the UK and SECP Securities and Exchange Commission of Pakistan under the Companies Act, 2017, annual accounts, and tax returns. Public record. Company details, including directors and owners, are public. Higher costs. Increased fees for accounting and compliance. Financial statements. Income statement. Profit and loss account calculates gross profit and net profit/loss for the year, deducting expenses, including directors' remuneration, from revenue. Balance sheet. Statement of financial position shows assets, fixed, current, liabilities, long-term, current, and shareholders' equity, capital, reserves, at the end of the period. Cash flow statement. Details cash inflows and outflows from operating, investing, and financing activities. Statement of changes in equity. Details the movement in share capital and reserves. Notes to the accounts. Provide details on specific line items. Key features, considerations, and regulatory requirements. Compliance of mandatory auditing. Listed companies must have their financial statements audited. Taxation. Limited companies are taxed separately on their profits, corporation tax. Filing requirements. Listed companies must file audited accounts within 30 days of the annual general meeting, AGM, according to the SECP guidelines. Vertical format. The financial statements, especially the balance sheet, are typically prepared in a vertical format. Public disclosure. These documents are essential for stakeholders and public record, offering a true and fair view of the company's affairs. Specific items. Redeemable preference shares are treated as non-current liabilities, with dividends as finance costs. Limited liability. Shareholders are only liable for the amount invested. Thank you.